Hey guys, it's your boy Nico here from the Small Axe Podcast. I want to show you how to use your small axe to build a lasting empire. You see, not everybody begins their investing career with millions of dollars, a huge network of investors, or the knowledge necessary to become successful in this space, and that's okay. What I focus on here on this podcast is helping you hone your skills, sharpen your tools to become the best investor that you can be. Now, I want you to sit back, relax, and enjoy this show. If you have any questions or you want to reach out to me or the guest, feel free to do so. Love you guys. Well, okay, small axe people, small axe community, small axe, but sharp axe. That's you guys, right? So we're sitting here, we're sharpening our axes. We are learning, we are growing together, we're educating ourselves, and we're setting ourselves up for future success with our small yet mighty axes. So thank you guys. I appreciate you guys for jumping on my podcast, for listening to me, for supporting me throughout everything that I've always done and wanted to do. And I just wanted to say thank you guys. So today it's going to be just me again. And I like doing these solo episodes. I'm getting a lot of good feedback from them. I am apparently providing some value, so I'm going to continue to do this. At some point, maybe I'll ramp it up and give you even more episodes per week. But right now, we're sticking with one episode per week. Now, today, I wanted to talk a little bit about the idea of betting on the jockey, not the horse. Okay. There is, the deals that I have done and the experience that I've had now up until this 4+ years of working in this multifamily real estate space, of creating my journey, my quote unquote legacy that is not fruitful yet, but will be fruitful based on the patience that I'm having and the work that I'm putting in and the equity that I'm getting in deals. Eventually it will all pay off. But what I've learned over this time is that you can underwrite a deal to death. Bill Ham calls it pencil whipping a deal, right? But in the end, what matters most is the person that is driving that deal, the asset management team, the property management team, the general partnership team. These are the people in the driver's seat, driving this deal to success. Okay. And I came across, so people have been saying for the past 4 years, and I hear it all the time, bet on the jockey, not on the horse. The underwriting is one thing or whatever, but whoever's managing the deal is extremely important. So, and I harp on this a lot. The fact that you should be underwriting your deals extensively, and you should. And if you're going to invest with somebody or an operator, you should review their underwriting absolutely, 100%. But what I did notice also is that I made a little error on the most recent underwriting that I've done. And you're going to kill me for saying this, but I fixed it. So I changed the error. Yes, I fixed the error. But if you look at then there are just so many boxes to tweak, so many little things that you can tweak to fudge the numbers, to make them kind of look the way you want them to look, to hit those metrics that everybody out there is looking for, the 15 IRR, the 8% cash on cash, and the 18 to 20 average annual multiple, and the 2x equity multiple. I'm sorry, the 18 to 20% average annual return and the 2x equity multiple. You can get those numbers by pulling so many levers. And if you're not versed well in underwriting and you don't catch that in an operator that you're planning on investing with, that's a problem, because they could be fudging those numbers, right? I made an error and it changed things significantly, but I fixed it with tweaking other things. Believe me, this was not in a way that is devious at all, but I found other errors. So that one error led me to find other errors, and everything kind of balanced out in the end to basically the projected returns that I'm projecting anyway. But it's interesting, and it made me think about the integrity of the person that I would be investing with behind that spreadsheet. You can pencil whip a deal to death, okay? You can make numbers look the way that you want them to look. You can say, I'm going to do X, Y, and Z and make this perform this way, X, Y, and Z. And it's possible. I'm not doubting that at all. But what it comes down to is the person who's got to execute that business plan, the person who then has to take that spreadsheet and turn it into an actual functioning business, right? So you have you can use the spreadsheet as a guideline, right? And it is loose. And it's a loose guideline that yes, it's going to be a moving target and things change all the time. But who's driving that wheel, right? Who's the jockey that's going to actually try to ensure that that business plan gets hit or met, and those metrics get met? Who is behind those, creating those KPIs from based on that spreadsheet that you need to hit, and delivering them to the property manager, and then holding the property manager accountable? These are all excellent questions. So it's really, and I just had a conversation with Tony Castronovo from last week. I just had a conversation with him about the importance of understanding and trusting and knowing the operator that you're working with. So in my mind, if I knew and trust an operator, and I do certainly trust a number of them, and they came to me with a deal, I don't even really need to look at the underwriting if I trust them properly, because I know what they're going to present to me and I know that they're going to perform on that. And that's basically it. If you don't know somebody and you haven't done a number of deals with them, you should be analyzing the crap out of that underwriting and asking a lot of questions and making sure that it is exactly how you would underwrite the deal. When I first started, I tried to do some, do some co-sponsored deals, and I was looking at other people's underwriting, and I was like, well, my underwriting's different, and I wouldn't underwrite this aggressively or this way, but maybe these operators are different than me. Maybe they know more than me. So let me try. So I tried co-sponsoring with a couple different teams, and it worked. But the business plan was not necessarily made or hit, right? So I kind of then fell back. Well, I think my underwriting was a little bit better and a little bit more quote unquote conservative. So it once you fully and truly understand underwriting, which I feel like everybody needs to do, and let's say you're going to be partnering with somebody, you need to fully trust in that person. And I feel very strongly about relationships, trust, and integrity, that those are the driving factors for success, more so than a spreadsheet that somebody is sitting behind and tweaking numbers on. So keep that in mind. That's really all I wanted to say this week. But if you're still struggling with underwriting and you're not fully there yet, and you can certainly trust in an operator, that's okay. But here's some quick things to think about. If you, let's say you know the market well. If you know the market well, try to imagine, take like the gross rent, right? Let's say rents are, let's do it right now. Let's say rents are $1,100, $1,100, okay? And there's 10 units. So it's 11 times 10 times 12. This is your annual gross annual income, right? Let's divide that number by 2, because we're going to assume a 50% expense ratio. Divide that by 2, which is actually conservative. So if you're, it depends on the class. If it's a C class property, it's going to be more like, it's going to be closer to 50, 45, 50%. If it's a B class, 40%, and then A class might even be under 40%. So divide that by 2. I have $66,000 in NOI, let's say. Obviously, this is complete back of the napkin. Now let's divide it by a market cap rate. So I'm going to divide that by 0.06, which is a cap rate, 6% cap rate. And that gives me a $1.1 million purchase price. Now, if somebody's paying $1.3 million for a deal, and you just did this quick back of the napkin analysis, you have to ask why, okay? And you have to figure out why or how they're going to be profitable. They might have excellent debt on the property to allow them to cash flow. Perhaps the tenants are actually paying all their utilities and the expenses are lower. Perhaps they have a nice utility bill back system and the income is higher. So there are definitely a lot more things to think about and to consider. Another thing that I like to look at, this is another quick tip, is the 1% rule. And I might do it a little differently than other people, but let's say rents are $1,100. Let's say rents are $1,000, right? So if rents are $1,000, I'm expecting to pay $100,000 or less for the unit. Okay, that's hitting the 1% rule. If you are paying more than that, then you're under the 1% rule in my mind. So to beat that, so let's say, so here's the quick example. We, on our 10 unit, rents are 1113. That is by Section 8 rents, 1113. And we paid 82.5 a door. So we are beating that. So our rents are higher than that 1% rule. In my mind, obviously there's different ways to calculate that 1% rule, but that's a quick way to do it. So if rents are $1,000, you should be paying $100,000 or less per door. And obviously there are factors that go into that. Let's see other tips. So this is just off the top of the head, guys. I'm just banging some tips out for you guys. So let's say, let's say that we were going to factor in an all-in cap rate, right? So all in means that you have your CapEx budget as well, because that is something that people tend to underestimate. You have to have reserves. You have to come with reserves from upfront. I like to do that instead of using operating income to fill and replenish reserves. We come up front with reserves and CapEx budget, and you have to plan for that. So your all-in cost per door is also very important. You might want to say that, hey, if rents are going to be $1,000, then my all-in cost per door should max out at $100,000, meaning maybe you're paying $80,000 a door, and then you're putting in $20K for reserves and capital expenditures. Just think about it like that. Now, if you ever run into any underwriting trouble, you can reach out to me, Nico, at smallactscommunities.com. Hit me up. I will share my underwriting template for now with you as I'm building the better version of it. And then it's going to be sold for a pretty penny. So hit me up now, and let's talk now, because time is a ticking. And guys, there are deals out there to be had. If you can make a deal work with 7% interest rate, and let's say rates stay the same, you're good. Let's say rates go up a little bit, you're still good. Let's say rates go down, you're great. Okay, so if you got to make a deal work today at 7%, don't be afraid to buy something. But if somebody is selling, perhaps they are selling for a reason, and they might be in a little bit of trouble. So not necessarily take advantage of people, but what I'm saying is to try to offer somebody to alleviate their offer on something that will alleviate somebody's pain. One of the objectives in these transactions is to make everybody happy. Solving people's problems is going to get you a deal. So somebody's problem might not be a certain purchase price. Somebody's problem might be that they want to sell or finance a deal and get consistent income. These are things you need to think about. And if you're having any kind of confusion or doubts, just reach out to me, guys. I'm going to start a coaching program again. I did a pro bono one, but that's not happening again. But you can reach out to me now. You can text me. You can email me. Find me on smallactscommunities.com. Keep listening to my show. Please subscribe, write a 5-star rating, give a 5-star rating, and write a review. Share it with somebody that you know, and let's keep kicking butt. I love you guys.
All right. Hey, Small Acts community. I would like to say thank you for listening to another episode of my podcast, where we show you how to use your small acts to build a lasting empire. Now, if you liked what you heard, it would mean the world to me if you would subscribe, leave a 5-star rating, and write a review. Also, if you want to get in touch with me, go to my website at smallactscommunities.com. Book a call with me. And until the next episode, keep sharpening those axes.